Welcome to the Leafy podcast, helping real estate investors and entrepreneurs grow. Say hello to your hosts, Jennifer Goglorick and Brian Price, founders of Leafy Legal Services, teaching you how to protect your assets, grow your business, and manage your wealth. Let's start the show.
Hello, Leafy podcasters. Today we have on another wonderful guest. You've got Jennifer Goglorick and Brian Price. We are the co-founders of Leafy Legal Services. So you might have heard today's guest on a really great TED Talk he did at Stanford, where he also talked about his time as a golf player on the German national team. But you probably know him because he started a great startup by the name of Carlypso. He ended up working and getting it bought out and joined Carvana, pre-IPO, went public at $2.5 billion, and they are now worth, of course, $40 billion. And then he's had this incredible career. He stayed with Carvana for 3 years. He left in June of 2020, and now he's at the company. It's with Clutch.com. So I want everybody to give a huge round of applause to someone that I'm going to get a lot of great information from. Well, maybe mostly Brian and me, Nicholas Hinrichsen. So Nicholas, welcome to Leafy Podcast. How are you?
Yeah, I'm doing great. Nicholas. Thanks for having me. It's good to meet you.
Yeah, I'm excited to have you. And I'm excited because you're outside. We mostly talk to, as you probably know, real estate investors, but we also talk to entrepreneurs. And your background and your history is like, a Cinderella story. You start a company and then you get in and now it's worth $40 billion. And it's just like so incredible, to have it. And I know Brian's got a question for you. I kind of jumped in over him.
Yeah. So let's talk about with Clutch. And then I think we're probably going to go through a lot of your background because I'm interested in that as well. But yeah, tell us a little bit about what with Clutch.com does.
Sure. And the company's called Clutch. The domain is withclutch.com. It's a digital platform to refinance auto loans. And that sounds really abstract. Let me walk you through how we came up with the idea. Mm-hmm. Before we sold our company, and we'll go into that in a minute too, we think of us as a car dealer. We were selling cars online, but we were fundamentally a dealership. And we noticed that 80% of the people who needed a loan for their car got a loan from us. But we have very different incentives, right? We as a dealership, we cared, but fundamentally dealers don't care that much about giving customers the lowest interest rate. What they care about is getting as much money for the loan referral as possible.
Right.
And so that's insight number one. If you bought a car, finance it at the dealership, you could actually refinance it the second you drive off the lot and save thousands of dollars already.
Really?
Yeah, because these loan rates are marked up. The dealership.
That's interesting.
It's less obvious to you than you would assume. That's number one. Insight number two is if you work with customers who had challenged credit at the time when they bought a car, could be because of an emergency, could be because you lost your job, could be because of a divorce, medical bills, you name it. COVID, exactly. And we can go into that in a second too if you want to. But if you have challenge credit at the time you buy the car and you make your payments for 6, 12, or 18 months, your credit improves, but your rate stays the same. And auto loan rates can be as high as 29%, which is crazy.
Yeah.
And so since you're stuck in a loan at the time of when you bought the car and you made your payments and you improved your credit, like the bank doesn't approach you proactively and tells them, hey, I want to earn less money now that you're more credit worthy. Instead, they're reaping the benefits. You're basically paying for other people who are defaulting on their payments. Mm-hmm. And so these two insights combined led us to start the new company.
That's cool. So what is a good rate that someone should be looking for when, say, they have, fairly good credit, they just bought a new car and all of a sudden they've gotten the dealer rate that supposedly incentivizes them and gives them a deal? Because I find a lot of times, if you finance with them, they take $1,000 off, or they have all these interesting incentives that make it seem like it's a really good deal.
Yeah, rest assured they'll make their money somewhere. Otherwise, the business won't work. So if looking at the credit spectrum, I'll simplify this, but you can distinguish between 3 different tiers. Mm-hmm. Call it challenge credit below 600. Near prime, that's between 600 and 700, and above, or prime, that's above 700. Mm-hmm. Now, walking backwards, if you're above 700, you have prime credit, you know that your rate shouldn't be higher than 2%. Like, you just know that because you know your credit card, the banks, you get mailers from credit unions. If you have better than 700 credit score, the bank from whom you want to lend money for your auto loan is a credit union. The reason that is credit unions are nonprofits. They have a community charter, so their goal is to get capital into the population to help you and I have good cars and safe cars. And so no traditional bank can compete with nonprofits. So if you have better than 700 credit score, make sure you go with a credit union. And then rates should be between 2 and 3% today. Okay. If you're between 600 and 700, it very much depends on whether you're 601 or 699. The banks you'll be working with are the traditional banks that you know, be it Capital One, Ally Financial, Chase, Bank of America, Wells, you name it. And these range rates can be as low as 3%, but can also be for credit for Capital One or Ally, for example, can go all the way up to 15, 16% if you're at the lower end of the near-prime segment. And then if you're subprime or challenge credit, that's actually a very different business than just lending money, because these banks, these auto finance companies, they're really good at repossessing cars, because 50% of the cars of the borrowers will default, so they need to become really good at getting the car back. And those rates could be as high as 29%. And so it's hard to just generalize what your rate should be. It's easier to do it if you're above 700. You should just aim for 2 to 3%. In any other segment,
I am paying way too much. Like, this is blowing my mind right now.
Yeah. What are you paying?
I don't even want to say it. Because I'm like so embarrassed, and I have a credit union. Now, at the time I got my car, I was at 760, but I'm over 10% at my credit union.
That's too high.
Yes, I know. You're telling me this.
It'll take me.
Man, I'm about to march in there and say, hey, Nicholas Hinrichsen just told me, or Henriksen just told me this. No, I'm dropping your name. You can't stop me.
Yeah, existing lender won't refinance you because they don't want to. You should be. I can get you a rate of 2.49% in no time.
Okay, Nicholas is going to get me the hookup. I'm going to get it. I'm going online. It's what now? What's that name? Withclutch.com. Okay.
Yeah.
Yes. I'm writing this down.
Written down.
And you think that in this space that I would automatically know the rates, but we don't know what we don't know, right?
No, exactly.
So I'm so glad you're on the show right now, because cars are not my thing. But
no, it's not the thing for a lot of Americans. Mostly when you go to the dealership, the final conversation with the financing manager is not about rate, it's about your monthly payment. It's just $459. And then like gap insurance, you want that. You want protection, great. Let's add another $5 a month and another $10 a month. And so that translates into like huge payments over a period of 72 months. The average car loan is close to 72 months now. And you just don't realize it's happening to you. The good news is you can fix it.
Yeah.
You can fix it after the fact.
Good. Yeah, we've refied both of our cars with our credit unions, we're below 3% on both of them.
Yeah, you should be.
Because what you get at the dealership, I mean, I think the last car we got was like 4.5% or something like that, which wasn't bad, but I knew
2% of that goes straight to the dealer.
Yeah,
if
exactly.
You buy a car that's say $20,000, which if it's nearly new can easily be that. The dealer makes $400 for just filling out paperwork.
Yeah. It's amazing how they do that. But I think part of it too is everybody's so afraid of the dealership. You know, I mean, you go in there, you negotiated this deal, and now all of a sudden they get to the financing and they kind of wear you down.
It's a racket, man. It's a total racket with that. And they do. It's a psychological deal.
Yeah, you're
because
exhausted then, yeah.
Yes, you're exhausted. By the time you finally sit down with financing, everything you talk to with the salesperson pretty much goes out the window.
Yeah.
It's like a whole different, it's like, okay, so I just need to erase that every conversation I had and have this new, scary, awful conversation that I'm unhappy with. Yeah.
I have a good anecdote for you. When I moved to the US, I had no credit history. Like, not bad credit. I didn't have any debt, just no credit. And then Chris and I were starting to work on our previous company. Chris found these little Fiat 500, but the electric version of that little car, promotion that was going on at the time. And they advertised it for $89 a month for a 36-month lease. $89 is less than my cell phone. That's how cheap it was. And Chris said, dude, we need to get those. It's more expensive not to have them. So we went to the dealership. He was done in 5 minutes. It took 5 minutes for him to get that lease. I sat down. 45 minutes into the conversation, the financing manager comes back. It's like, great news, Nicholas, you got approved. We got you a lease. Your payments is higher though. Your payments are going to be $1,200 a month. And I'm like, what? We just talked about 89. He's like, yeah, but you don't have credit. Like, you don't have any credit. We need to build credit first. And I told him, okay, so it's 36 months times $89. I can just pay you $3,600. You're done. It's like, no, it doesn't work like that.
Why?
And then I don't know. And then Chris had to co-sign for my loan, my co-founder. Or my lease. That's how I got $89. 6 months later, I made 6 payments of $89. Like you can do the math. It's less than $540. I, for fun, ran my own credit application, and I would have qualified for a loan of up to $100,000 at 1.99% at the time. And it shows you if you build credit by making payments, it can happen really quickly. You qualify for better rates really quickly. You just have to do it.
Yeah. Well, that's great. So you help people basically, if they come to you, you'll kind of run their credit and see where they're at, and then let them know what they can do to get a better rate.
Exactly. So with Run Credit, I want to be careful. There's the soft and the hard credit pull. Soft credit pull doesn't show up on your record, doesn't impact your credit. A hard credit pull shows up on your record, will hurt your credit. We wouldn't do a hard credit pull. The only reason and only time you actually need it is when you actually get the loan, because the bank needs to add the line, it's called trade line, to your credit history, and that will impact your credit by a couple of points. But for as long as you shop around, which is what you would do if you worked with us, it doesn't impact your credit.
Yeah, that's interesting. So you've had, let's go back in some of your background, because you had a really fascinating background. Why don't you kind of walk us through how you got involved, and then why did you really start Clutch as well?
Sure.
Because it seems like you had quite a bit to
it was a long journey, and it looks like a Cinderella story looking backwards, but it didn't feel like it when we went through it.
Yeah.
So as I said, I'm from Germany originally. There was a time when I thought about becoming a professional golf player. I played on the German golf national team, and decided to go to college instead, study computer science and finance, moved to the US for business school, met Chris, my co-founder at Stanford, and he's a huge car enthusiast. Like I'm not at all enthusiastic about some cars, but not generally and fundamentally about all. He loves cars. His first car was a DeLorean, the one from Back to the Future.
Oh, yeah. Did it run?
That's like a
cool
first car.
No, so it's a funny story, because his parents wanted to be really reasonable and tell him, hey, once you turn 16, you have a budget of $5,000 to buy a car. And they thought he'd buy the best car he can get for $5,000. But instead, he bought the worst car that he can get for $5,000. The most creative one. And so he found a completely wrecked DeLorean on Craigslist, bought it, and then his dad and he rebuilt it for 2 years until it drove.
Cool.
Well, but that experience, though, working with your dad, rebuilding a car, I mean, that would be so worth it. Right.
Yeah,
I think so. Yeah, that would be really good. That's actually a good story. I have a 14-year-old, and this last weekend, his dad supervised him, and he replaced all the spark plugs in this old van, and he ran like some sort of line to the van. I don't know what it was, and I was like, man, you're getting one heck of a, if the apocalypse comes and the zombies, at least you'll be able to do something basic like that. So that was awesome.
And you never know, that could happen anytime soon.
It's 2020, people. I'm telling you. We got murder hornets. We got this worldwide thing, and anything could possibly happen.
And so, towards the end of business school, Chris and I sat together and said, hey, we want to start a company, do something in the car space, because he knows it so well. And before we knew, all our classmates asked Chris for advice how to sell a car. And we went from giving advice to selling all our classmates' cars in a couple of days. And then we realized it's really messed up. Like if you want to sell your car, back then you would do it over Craigslist. It's a horrible experience. And we thought we can use technology to make it a better experience, create this test drive that's remote, where people test drive by themselves so you don't have to interact with people. We changed that model into more of an Amazon model, where we would have access to a lot of inventory and sell it direct to the consumer over the internet. Raised, I think, a total of $10 million in venture funding, and then sold the business to Carvana in 2017.
Wow, that's awesome.
Yeah, we got lucky.
Yeah. Well, I don't think it's lucky. You had a great idea, and you had it at the right time, and you pushed forward with it instead of just blowing it off. A lot of it isn't getting lucky. It's like, well, we tried to go for it, and sometimes it works and sometimes you fail, but sometimes you're the next Carvana.
Sometimes.
Yeah.
Do that 2 or 3 more times and you're settled for life.
Yeah.
Now there's this saying, a famous golfer always said, the harder you try, the luckier you get. And there may be some truth to that.
Yeah.
I think
That's great. So then after that is when you started Clutch.
Yeah. So we joined Carvana. Our company grew to a certain point, but wasn't going to be as big as Carvana. These guys were just doing much better, growing much faster. And so instead of competing against them, we met with the founders and executives, became good friends, realized we were very aligned in terms of values and what we wanted the world to look like in the car space. And then we said, let's just bring over our whole team, sell everything we'd built to Carvana, and then work on this together. And that was in 2017, May of 2017. We did that for 3 years. Chris, my co-founder, ran product for the pre-purchase experience, the website, Carvana.com, the search pages, the detail pages. A lot of that was powered through the systems we had built and integrated into Carvana. And I started from scratch the sell to Carvana business, the part of the business where you sell your cars to Carvana and have them pick it up.
Cool.
And then after 3 years, we felt like now things are in good place. We've hopefully had a lot of impact. But then the entrepreneurial itch came back, and we thought that somebody has to help people with car ownership. The wedge into the market, or the initial angle, is the refinance, but it goes beyond that. Like, Jennifer, if you have a high interest car loan, you might have gap insurance. You might have an extended.
I do. I have all of it. Yeah. Because I got in there and I was like, yeah, no, that sounds good.
Yeah,
you're going to say something else. Yeah, that sounds good.
Even if you said you bought your car 2 years ago?
I bought it in 2017.
Oh yeah, 3 years ago. So you're guaranteed to have positive equity now, or be very close to it. So next thing you have to do is request a refund for the gap insurance. You'll get half of it back, but the risk is gone now. Your gap insurance was $700. It's in the loan, so you don't notice. It's just $10 a month. The margin on that is the dealer buys it for $170. So the margin is $530. And you can, now that half of the loan term is over, you can get half of it refunded, but the risk is zero. Like if you have a total loss now, gap insurance covers the difference between what the insurance payout will be and your remaining loan. The insurance payout will be the same as your loan amount, if not higher.
I am learning so much right now, and I feel bad for all of our listeners. This has become the Jen's Car Situation show. But I know there's a lot of other people like me that are on this.
20 million.
20 million?
Yeah.
Okay, so I'm not just some sucker, some prune or something like that. Yeah, because you get in there and they're telling you all this stuff, and you think of they tell you all the things that go wrong, and I'm in asset protection. So I talk to people and real estate investors every day where things really went wrong. And my whole life is to prevent that. So I'm a fan of these things that can help people when things go wrong. That's just my personality by nature. And they get me. No, I don't think they got me, because if anything would have happened, you do
I don't think so.
Yeah, you do need gap insurance. But I did not know you could get a refund.
You can. It's cumbersome because you need to call your dealership who sold the car to you and tell them about a refund, and they have no interest in helping you, but they have to. So it takes a little bit. We could, version 2.0 of the product that we're building is to take care of all of that for you.
Really? Ooh, I can't wait till that rolls out too.
Yeah, we're building, think of a Credit Karma for auto-related expenses. So where you have a lot of components. You have, when you buy a car, you sign 6 contracts. You buy a car, you trade in a car, you have financing, you have a warranty, you have gap insurance, and you have your auto insurance. And if auto insurance is another good example. If your credit improves, your auto insurance rate will go down. And so there's a lot of reasons why it would make sense for something like Credit Karma to check in with you on a regular basis. We just happen to know the car space so well that we're somewhat uniquely qualified to build something like that.
This is great. This is a great service.
Thank you.
You're welcome. And I'm not just saying that because you're a guest on the show, but this is illuminating. I love learning new things, and I love learning new things outside of my comfort zone, and I really like it. So now you're doing this, and you have this 2.0, and tell me, do you still golf? Are you still a passionate golfer on your own time and stuff like that?
Interesting segue.
I want to know.
Do you play golf again? So I used to do it so professionally that I can't enjoy golf as much anymore. If I go on the course, which I do rarely, but when I'm like pissed off after my second shot because the expectation is the same as it used to be, but the shot isn't the same anymore.
Yeah.
So yeah, if I practice again and played with like really good golfers and became competitive again, like I think I would enjoy it. But it's a lot of work and I don't have a lot of time for it.
That's funny. Right. I'm the exact opposite. I suck at golf, but I love golf. And I can ruin every shot. I can have like on a par 3, I could be doing a 15, 20, shots. But then if I get one good shot, I'm like, that's it. It was like the best day ever. I'll be like, okay. So I'm like at 300 strokes for the day on a 9-hole. But hey, did you see what I did on par 5? I'm like so happy about it.
Yeah. So if I bogey a par 3, I'll be upset. Yeah, you won't hear me talking for 3 holes.
Really? So you fester.
If I don't birdie a par 5, the same thing. I'm like, shoot.
Yeah. Well, that's not fun. You need to. Well, I shouldn't be encouraging drinking, but I'm like, you need to drink more. And to get in the car.
This is interesting. This is what Americans do. I've never had alcohol on the golf course until I moved to the U.S. I also never ate any of these cards. Like
you got to
drinking beers.
No.
Not golf.
This is the American experience. You need to have a hot dog in one hand, a beer in another, using your knee to steer the golf cart as you're just having fun. That makes golf a whole different experience.
That's why you have gap insurance.
That's right.
And we know why she has 10%.
No, hey, knock on wood. I haven't been in a wreck or anything. I have a very good driving record. People because
so with Clutch, and you mentioned your 2.0 version, what's kind of the time frame you guys will maybe have that up and going so people can utilize that as well?
Yeah, so in 3 months from now we should be live with what looks much like a much more sophisticated product. We only left Carvana in June. We took 10 days off because we visited a few national parks. It was just a really good time to do it. Started fundraising, close to funding round just now, and now we're off to the races. So everything you're seeing is a beta version. It works. Like you can go through the funnel. At the end, it says congratulations, and we'll reach out to you. And then there's a mechanical Turk in the background doing all the hard work, that's me. So it works. We can get a bit of loan for Jennifer, but like that will all be fully automated and a really slick experience in 3 months from now.
Excellent.
Gosh, that is quick execution. I'm amazed with that as a business person.
What's your long-term vision for the company? What's kind of on the horizon, 2-5 years down the line? Yeah,
I'm glad you're asking. So that we got really lucky with our exit of our last company and then the way Carvana developed. So financially, it worked out really well for us. Now that we take another step at starting another company, it was important to us that we do something that helps and impacts positively a lot of people. And one area we've been very passionate about is personal finance in general, but particularly for people with challenged credit, people who had an emergency or just never received any good training around financial literacy. And so we looked at a lot of businesses that you could start. The one that was most appealing to us is because we understand it best is the wedge with auto refinance. It's so obvious how people are massively overpaying. Nobody addresses it. And so the step one is build this auto refinance business. Then step 2 is figure out all the expenses related to your auto. And then the long-term vision really is to put money back into the consumer's pocket. If you have 2 consumers, one has a really high interest car loan, the other one happens to have got it as a present. The person who doesn't have any payments builds wealth. While in the meantime, the person who has these high interest payments is continuously at risk of defaulting on the loan. That means credit is low. That means she or he doesn't have access to credit. Can't build a business, can't build wealth. And it really is one of the big contributors to income inequality, I believe. And I'm hopeful that we can do our part to address that.
Yeah,
I love that mission.
A lot of people are overextending themselves. I mean, I live in Southern California, and they did an article at the Newport Mercedes-Benz, and they said how do so many people buy these cars? And they said 60% of the people couldn't actually afford it. And so they get these leases that would be outrageous, and then they would return them early just to get the next newest thing. So
that's something you can't fix. Fixing mindset is difficult in culture. In Germany, that would never happen. In Germany, you buy cars and you borrow the last $2,000 or so just to get a head start. but you'd never fully finance it or finance more than 100% of the car. That happens in the US all the time.
Yeah.
So a lot of that you can't solve, I believe, but what you can solve is that person, that mother with 3 kids that lost her job and needs to find a new one, all of a sudden payments are up, has now made payments for 6, 12, or 18 months and deserves to get some help because she has been disciplined and nobody else is helping out. That's where you can help out a lot. And I feel like that's an area where we can help a lot.
Yes, you can. Because it's a hamster wheel, and poverty in itself is a terrible hamster wheel, because once you get pushed there from circumstances or maybe an illness or maybe a COVID, you didn't want the government to shut down and then your job just go poof overnight. You were working, doing your stuff, and now you're in the situation that was not of your choosing. You do not want, and if there's not places to help you to get back on track so where you can get back to where you were, then you move into this other realm. You dip down, and now that hamster wheel is even harder and harder to get around. And then all it takes is just one little thing. I can tell you, I talk about the time when I was homeless as a teenager, and that impacted my whole life. And I saw families drop their kids off at the shelter, because I stayed at a shelter that only takes kids, and that's what happened to them. It was just one little thing that they did not plan on another. And then before you know it, everything is just so insurmountable. And we don't talk about it. We have a culture of, well, they must have done something wrong. They're on drugs. They have mental health issues. Like, well, they're crazy. So, we don't have to talk about this or fix this because something is broken with them and they're kind of beneath us. And really, I'm here to tell you there are great, wonderful people in this country right now that are really, really struggling, and there's nothing wrong with them. It's just sometimes things happen and you need to have these programs. I'm a big fan of that. I am so glad that you're out there doing that, because no one thinks about how important it is for a car. And here in the US, if you don't have a car, in most places, you can't get a job, you can't go anywhere, you can't afford to take a taxi or Uber everywhere. That's cost prohibitive. And we do not have a lot of public transportation. And unfortunately, the public transportation we do is many times quite unsafe. So you're having to sit there and go, okay, so do I want to put my life at risk, or the kids, or this, or all? And all you need is a car. So so thank you for that.
Well, thanks for reiterating what I think is completely right.
Yeah, it is. It is. I want to validate that, and I want to say that it is right. And I'm glad there's somebody like you that has your background and your experience who can see it and go, hey, here is a problem, but all problems are just a solution away from being fixed. And we need more people thinking about that, because we do have some big problems. People are rioting over problems, but we can fix them. It's just something we can fix.
One problem at a time.
That's right. One problem at a time. One problem at a time. Well, we're getting to the end of our time right now. We've been talking with Nicholas Hinrichsen. And Nicholas, if you want to find out more about him, you can just type in with, W-I-T-H, Clutch, CLUTCH.com. And the website's name is Clutch, but it's withclutch.com. And you can find out more if you have any, just want to help yourself. Maybe you can get a better rate, or maybe you can refer this to someone that you know. Again, he's in beta, so in a couple of months, he'll be able to have other programs there. And I just want to thank you so much, Nicholas, for being on the show and for telling us all this stuff.
Thanks for having me, and thanks for totally understanding what we're doing and being equally as excited as I am.
I am excited about it. I am very excited about it. And hey, guys, we're at the end of our Leafy podcast. I want to thank you again for joining us and for being fans of the show. You can find us at Leafy Legal, anywhere podcasts can be found. And if you enjoyed this, if you got value out of it, please go ahead and rate us and give us a like, because that helps us reach out to more people, and we can get this wonderful information and incredible people like Nicholas out to more people to help. So thank you, guys. I hope you'll have a wonderful week, and thanks for joining Leafy Podcast. Bye-bye.
Attention real estate investors and entrepreneurs. Did you know that real estate investors are a primary target for lawsuits? According to the National Survey of the Court data, 25% of Americans risk being sued in their lifetime. However, if you are a real estate investor, you have a 95% chance of being sued in the next 20 years. Leafy Legal Services helps you protect your assets and strategically grow your business and wealth. Leafy Legal Services are experts at the Series LLC and Delaware Statutory Trust, two of the newest and most ideal legal structures for real estate investors. Leafy Legal Services have the most personalized and affordable solutions for setting up LLCs. Property owners are always at risk when it comes to their assets. Anonymity is so important. If you own just a rental house and you own your home, you have to protect yourself and your properties from any potential legal issues. Leafy Legal Services have the right solutions to make sure you are happy and feel secure. They offer cost-effective documentation that suits their clients' needs. For a free consultation and ebook, visit LeafyLegalServices.com. They are waiting to hear from you. LeafyLegalServices.com.
Follow us on Facebook, Twitter, and Instagram. Don't wait. Take action now. LeafyLegalServices.com. Protect your assets, grow your business, and manage your wealth.